Bloomberg Audio Studios. Podcasts, radio, news.
The Stock Movers Report, your roundup of companies making moves in the stock market, harnessing the power of Bloomberg data.
Let's take a look at some stocks on the move today. I'm Nathan Hager, joined by Bloomberg's Valerie Teitel, and what's turned out to be a pretty busy morning when it comes to earnings. Starting with Target this morning, Valerie, getting crushed pre-market. Good morning.
Yeah, getting crushed pre-market, should I say, down over 9% for Target after they announced a C-suite change, naming a new CEO, a longtime executive and current COO, Michael Fiddelke, to take over the CEO seat in February. Perhaps this is Target betting that an insider who actually started as an intern at the company 20 years ago will rejuvenate sales and help the storied retailer regain its footing. This new CEO will face a challenge of reversing an extended streak of weak performance and loss of market share to competitors such as Walmart and Amazon. The earnings, though, did show slightly better than expected when it came down to sales, but the stock is down 9.5% on this announcement of a C-suite change. Maybe it starts to beg some questions on a wider strategy change coming afoot.
Well, it's a much different story this morning for Lowe's following their earnings. Yeah,
they boosted their full-year outlook. Lowe's shares are up 3.4% in pre-market, shrugging off a weaker DIY demand from a slow housing market. When it came to their earnings, their net sales also met estimates, and they raised their sales guidance for the full year 2025. They've also announced an acquisition. They're going to be buying a Foundation Building Materials. This is a company that is a North American distributor of interior building projects in both new construction projects for residential and commercial projects. So that's a big move for Lowe's, maybe getting into more of the commercial building space. They are buying that company for $8.8 billion and expect it to add to adjusted EPS in the first full year. So Lowe's doing quite well this morning at 3.4%.
And we're also seeing a big move, but not doing so well when it comes to Este Lauder following their earnings this morning.
Yeah, Este Lauder, disappointing, down 7%. The stock was actually down at 1.14% after their full year guidance disappointed market expectations. There was also an organic sales decline for the previous quarter that was slightly worse than expected. The company also said they're going to be booking a $100 million loss from tariffs for the year. And Este Lauder is currently evaluating ways to mitigate potential tariff risks as its supply chain is highly exposed to China trade. So Este Lauder, a bit of a disappointment, down 7%.
A bit of a disappointment, maybe an understatement when it comes to Homebuilders. The U.S. traded shares of James Hardie are the biggest losers this morning.
Yeah, not looking good for James Hardie. This is the building materials maker, down over 27% in the pre-market trade after it warned of weak demand for repairs and new construction across North America. Look, you combine that with what we heard from Toll Brothers, who is the luxury home builder. They cut their home deliveries guidance for the full year. Those shares are down nearly 3% in pre-market trade. This really points to softness in new construction, a challenging soft housing market for the U.S. That's what that picture of both of those paints together.
The Stock Movers Report from Bloomberg Radio. Check back with us throughout the day for the latest roundup of companies making news on Wall Street. And for the latest market-moving headlines, listen to Bloomberg Radio live. Catch us on YouTube, Bloomberg.com, and on Apple CarPlay and Android Auto with the Bloomberg Business app.